Thank you all for joining the Robot Payment first quarter earnings call for the fiscal year ending December 2026. My name is Fujita, and I will be your moderator today. Today's speaker is Representative Director and CEO Kenya Kyoku, Director Sota Kuno, and Chief Operating Officer Takehito Fujita. It is a pleasure to meet you. Thanks for your time. Now, I would like to invite our representative Kyoku to deliver the opening remarks and begin the presentation. Thank you.
Good evening. Let us start the first quarter earnings presentation for the fiscal year ending December 2026. Starting with the agenda, I would like to walk you through today's presentation like this. Let's start with the earnings highlights. The first quarter ended. Sales grew 17.8% compared with last year. Operating profit rose 40.4% year-on-year. As shown, sales, gross profit, SG&A, and operating profit grew, with net income up 48.2% year-over-year. On the right, you can find progress against our forecast, which we released in February, is near 25%, with profits already higher.
Moving on, I would like to provide a report regarding our company-wide performance results. To begin with, let us look at the quarterly sales trends. Starting from the first quarter of the fiscal year 2024, we are presenting the data on a quarterly basis. Pink recurring revenue drives growth, with sales up 17.8% year-over-year. We have also provided the quarterly operating profit trends starting from the first quarter of the fiscal year ending December 2024. In the first quarter of 2026, we generated 225 million yen in operating profit. We achieved 40.4% growth year-on-year, and as you saw in the quarterly breakdown, we hit record profits. This is the KPI dashboard. This shows KPI trends since the first quarter of 2022. Our account count, average revenue per user, recurring revenue ratio, churn rate, and ARR are all trending well. Our main products, Subscription Pay and Billing Management Robo, are both growing steadily and continue to reach record-breaking sales figures. Here is the balance sheet. Continued profit generation has led to an increase in net assets and shareholder equity. On the other hand, due to the dividend payment at the end of March, the increase in net assets did not grow as much as net income. During the first half of the year, we paid out a dividend of 28 yen per share. We forecast a 31 yen dividend, continuing our dividend hikes and payout ratio to reward shareholders. Let's move on to deposit in this page. As I have explained on previous occasions, our company is engaged in the payment business, and due to our business model, we occasionally hold customer funds temporarily. At month end, customers' funds stay on our balance sheet. Accordingly, on the balance sheet, cash held is recorded as an asset and deposits as a liability, which expands our balance sheet. As a result, the accounting capital adequacy ratio calculated mechanically appears as 15.5%, but when we exclude deposits to measure our actual financial health, the adjusted ratio is 68.8%. We recognize that our financial health is very strong. I will now report on the trends by business segment. First is Subscription Pay. We have also included the trends from the first quarter of the fiscal year ending December 2024. Here are quarterly sales. First quarter 2026 sales hit 527 million yen, a new record. There has been a growth of 17% compared to the same period last year. We are seeing continued strong performance in new orders, and the increased activity from our existing client base is being reflected in our average revenue per customer, which continues to drive our revenue growth. The recurring revenue, highlighted in pink, is the primary driver behind this trend. These are our key performance indicators. On the left is the average customer spend, and on the right is the growth in account numbers. Both are growing steadily and continue to hit record highs. Next, here are the trends for payment volume and transaction counts. Our payment volume continues to show steady growth, which is being driven by an increase in the number of accounts, as well as the business growth and increased activity of our existing customers. Payment volume was hit by mandatory 3D Secure last year, but it stabilized by the fourth quarter, and we are growing again. Next, Billing Management Robo. Billing Management Robo also shows sales figures by quarter. Similarly, our average customer spend and customer count continue to rise, leading to record high sales. We achieved over 350 million yen in revenue, a 19.4% increase year over year. These are our key performance indicator trends, showing customer unit price and account counts. The average customer spend on the left has reached a record high, growing by nearly 4% year on year. As you can see, the number of accounts on the right side continues to grow at a steady pace, representing an increase of more than 12%. This shows the trends in billing amounts and the number of invoices issued. You can see that both have increased significantly compared to the same period last year.
I would like to take this opportunity to discuss our business highlights starting from this point. First, let us look at our business strategy for the year 2026. This document details how the first quarter performed in relation to the goals we shared in our previous announcement. First, regarding our new receivables collection robo initiative, we successfully released it on March 10th. We have a patent pending and are using seminars and exhibitions to market it, primarily to existing clients, and the response has been much better than initially planned. The team is also enjoying the sales activities. In line with that, we have begun developing an automated integration between the billing management robo and the receivables collection robo, as noted above. We expect this integration to create a synergy effect. Another significant point is that development for expanding the payment methods on SubsPay has already begun, and we anticipate that these expansions will be implemented within this current fiscal year. Next is the overseas remittance robot. Preparations for electronic payment agency registration and POC are underway, and we are moving toward commercialization. Everything else is going well. Next, here are the topics. First, we have introduced a shareholder benefit program with an initial record date of the end of March 2027. We previously held a 25th anniversary benefit, but this one will be a permanent program. The benefits we offer vary based on the number of shares you hold, as a way to show our gratitude to shareholders who hold our stock stably and for the long term. Moving on, as I touched upon earlier, we have officially begun offering our new receivables collection robo. The patent is currently pending, and we are in the final preparation stages of implementing AI-driven debt recovery. We have already received very high praise for this AI integration, and we are committed to creating a winning debt collection process that is truly different from anything we have done in the past. Moving on, as has become our annual tradition, we are proud to announce that we have received the iTriview Grid Award for the 13th consecutive term. Winning this award repeatedly is a testament to the fact that our user satisfaction ratings remain consistently high. I have always emphasized that there is real meaning in maintaining this streak. While we certainly feel the pressure to keep winning, we remain committed to further enhancing our customer satisfaction moving forward. Lastly, we have officially released a new feature for Billing Management Robo that enables reconciliation at the individual invoice line item level. Although this might appear to be a very subtle update, electronic invoicing has now become the standard, and the market is increasingly moving toward receivables management. Our company is designing products that focus on both receivables management and receivables collection. By allowing for more detailed reconciliation, we can help accounting teams become even more efficient.
Moving on, I would like to explain the trends in costs. We show the quarterly trends for advertising, salaries, and development costs, which make up most of our SG&A expenses. First, as a fundamental premise, this fiscal year is the first year of our long-term management strategy announced on October 10, 2025. As stated in that strategy, we aim for higher growth rates in the future while assuming continuous revenue and profit increases. Following this strategic policy, we are currently moving forward with investments in advertising, staff salaries, and development costs. As for our advertising and promotional expenses, they have seen a slight increase over the most recent quarter. As Fujita mentioned in our new businesses, we hired high-level talent for M&A and new business this first quarter, and we are working hard with our team to bring you good news this term. Regarding development, We are promoting in-house production and utilizing AI in our products and development sites to further speed up and provide better quality, while continuing to strengthen our development organization. Regarding the trend in the number of employees, it is as shown here. Lastly, we would appreciate it if you could sign up for our email newsletter and our official Line account. Our financial results were announced today. Register for our Line account or newsletter for timely updates. You can also send us questions via Line.
Thank you very much for your kind attention. To conclude, our representative Kyoku will now offer some closing remarks.
I would like to thank you all for joining us here today. As Fujita explained, our new business is progressing well this term, so we will work hard to make an impact within this year. We'll hold a Q&A for investors on May 18th at 6 o'clock, and I look forward to seeing you there. I would like to thank you very much for your time today.
That concludes the Robot Payment Incorporated first quarter financial results briefing for the fiscal year ending December 2026. Thank you very much for joining us.